is Lemmy Manje. I'm CEO and founder of FinProbity Solutions, and very delighted to co-host this with the Technical Advisory Group Association of Zambia, with the tag who spearheads microinsurance or inclusive insurance development in Zambia for over 10 years now. So it's exciting to have to co-host this seminar with the tag. So this seminar is about digital inclusive insurance solution, very timely as we focus on how can we deal with digitization of insurance services even amidst the pandemic. And I'm delighted to have international speakers, regional speakers and local speakers joining us to share their experiences. As you saw from the promotions, that this is a practitioner seminar. So you listen from people who have had it over maybe the last 20 years, 10 years, experiences in terms of trying to navigate developing business models and trying different products to penetrate the low income market segments. So it's a very exciting seminar, and I encourage all of you to join throughout. It's 1.5 days. So today we have 3 sessions, and then tomorrow we'll have 2 sessions with the wrap up. In terms of just highlights, so this particular session is just over 1.5 hours. It will be recorded, and all the presentations will be made available on the website for the Munich Re Foundation and also FinProbity Solutions. As we go through this session, there is a Q&A function. Feel free to post your questions there. And should you have any technical issues, you can use the chat function as well. I'll go straight without wasting time to introduce the speakers that we have. So for the opening, we have Betty Wilkinson, and Betty is the CEO of Financial Sector Deepening Zambia. And I personally have been privileged to work with Betty for over 5 years. It was exciting working at the Financial Sector Deepening Zambia. So it's great to have Betty on board. And then we have Tresford Chiyavula, who is currently the acting pensions and acting registrar for the Pensions and Insurance Authority. Again, we are honored to have him on board so that he can provide the regulatory aspects when it comes to digitization of insurance, inclusive insurance products. Then we have Katherine. I won't attempt to mispronounce the surname. But Katherine is the executive director of the Microinsurance network, and FinProbity is delighted to be part of the network. And you've seen that the network provides great resources and also networking platform, including this one. And then we have Shipango Muteto, who is the president of the TAG Association, but also the director at the Zep-Re Academy. And Shipango has been part of the TAG for quite a while. And again, it's an honor to have him on board to speak on the role of the TAG, and also particularly why the TAG is involved in initiatives like this one. And then finally, Dirk Reinhard, Vice Chair of the Munich Re Foundation. Again, someone I've worked with for a long time with the regional conferences here. It's always a pleasure to work with Dirk. And Dirk has also been instrumental for the international conferences on inclusive insurance. So again, it's a pleasure to have Dirk. So quite good speakers for the opening to give, to set the scene and provide some context of this conference. And then for the keynote speakers, we have Lucia. Lucia is a senior researcher at Cenfri, and again, very happy that she agreed to provide the keynote presentations. All of you know that Cenfri is well known for rich insights from research when it comes to financial inclusion and including insurance, inclusive insurance issues. So very delighted again. And then Rishi, he warned me never to attempt to pronounce his surname as well. He's a senior advocates manager at GSMA and based in the UK. So very good speakers for the opening, and I'm very excited to actually have the scene. And without wasting much time, we'll go straight into the keynote speeches, and we'll start with Shipango, then Tresford, Katherine, Dirk, and then Betty. Thank you so much. It does seem like Shipango has lost connection. Okay, he's back. Just unmute yourself and start.
Thank you. Good morning, everyone. I'm just getting my slides sorted out. I'm sorry about that. Just allow me 1 second just to get my slide opened up. Sorry. Good morning, everyone. I'm very sorry about that. Just to welcome everybody to this exciting webinar. For me this morning, representing the Technical Advisory Group on Microinsurance, is just to welcome you to all our guest speakers and those that are opening the opening remarks, our facilitators, and all those that are moderating, and all the participants to this webinar, for which we are grateful. I'll briefly just take some 3 minutes and some activities, the stakeholders, and why we fully support and partnered with the various stakeholders that we have, FSD Zambia, Microinsurance Network, Munich Foundation, because we think that in this particular, for us to have scale, it's important that we look at digital, but I'll speak to that as well. Then we'll look at what are the activities that TAG is looking at and working with in the year 2021. For the TAG, for those that are maybe knowing about this for the first time through this webinar, essentially we have been around from 2009, and we are a group of various stakeholders in industry in Zambia, working for one common purpose, that is to ensure that there's the insurance is an agenda that right is at the top. We advocate, of course, like I've mentioned, for inclusivity in the provision of insurance services. And over the years, we've worked with, for example, the regulator, with the Pensions and Insurance Authority, the government of the Republic of Zambia, and several other stakeholders to work on the microinsurance regulations, which I believe the PIA, as they'll be speaking this morning, they'll be alluding to the fact that finally we hope to have a new insurance act in 2021, which now recognizes and provides for a microinsurance license as a third category of licenses that is available. Of course, we have a membership that cuts across all various stakeholders, and our role is to provide value to the members, particularly those that are full-time members with the association. Then, of course, in 2018, we hosted the National Microinsurance Conference in Zambia, which we believe was very successful. And of course, over time, we have implemented various training activities and programs in the market. This is just to give an indication of the stakeholders that have steered and spearheaded the activities of the TAG over the last couple of years from 2009 to date. Of course, we have development agencies, and in this, let me salute FSD that have supported the activities of microinsurance in Zambia. Of course, proud that we had ILO and a number of other agencies that worked. And then, of course, we have the regulator is a stakeholder in the development of microinsurance. And then the Bank of Zambia. Then, of course, we have all the insurance companies, both on the life and the general that are working in the market. Then, of course, reinsurers. Then, of course, again, the ministries, government ministries, particularly Ministry of Finance, Labor, and Social Security. I'll be speaking to that because we have also the Zambia Association of Pension Fund Managers, because we're also looking at the aspect of the issue of micro pensions. Of course, the Pensions and Insurance Authority have a working group through the Ministry of Finance that is looking at that. So we have the Zambia Association of Pension Fund Managers as part of the stakeholders for the advisory group. Then why do we believe and have, of course, invested our energy and resources in this particular webinar, and much more broadly, why do we think inclusive insurance is a solution? A digital insurance is a solution. Of course, it is, as everyone knows, this is without doubt the proven model. And we think also it's a prospect for scale with regards to inclusive insurance distribution, given the fact that, for example, in this environment now that we found ourselves in with regards to COVID, it's important that if we to reach everybody, we need to invest, or the players and all those that are involved in inclusive insurance. Digital is the way to go, and that's what will bring scale. And then, of course, in the past, of course, over the years, insurance was particularly in these developing markets. We think that insurance needs to find itself as part of the digital financial services that are provided. Again, speaking to our first point on the issue of scale. Then, has hosted FinPro Solutions, supported, of course, by FSD Zambia, Microinsurance Network, and Munich Foundation, and other stakeholders, will showcase to all that have chosen to be with us today to look at the practical strategies, models, and solutions on how insurance can be made affordable, appropriate, and also accessible to all low-income segments using digital platforms. Looking ahead, as the TAG, we have a number of training activities that provide the rest of the year. We have, for example, an inclusive insurance, agriculture insurance solutions webinar that will be coming up in July. And then we'll be looking at an inclusive insurance product development and application of human capital, human-centered design. We will be partners in October. And there's, of course, inclusive insurance distribution and the CEO's retreat in September, October 2021. For this, we just want to acknowledge this morning all the facilitators, all the moderators that have left a number of important things they could have been doing, but believed in the TAG and FinPro, through this webinar, that they could come and share with us a lot of experiences in the inclusive insurance, particularly with issues to do with the digital solutions. So I'm sure participants between today and tomorrow, you will listen to resource persons that, like I mentioned, have a lot of experience and also have experienced the delivery of insurance through digital solutions. And lastly, of course, I've already paid tribute to the partners that have partnered with us to deliver this webinar to all that are gathered around this webinar this morning. With that, I want to thank you, and let me back over to you to have our next speaker. Thank you.
Thank you so much, Shipango, for those opening remarks. And now we transition to the acting registrar of the Pensions and Insurance Authority.
Good morning. the TAG Association President, Mr. Shipango Muteto, the Microinsurance Network Executive Director, Ms. Katherine Pulvermacher, I hope I will pronounce it correctly, Munich Re Foundation Representative, Mr. Dirk Reinhard, FSD Zambia CEO, Ms. Wilkinson. Good morning or afternoon, depending on where you are. I'm honored to speak to you this morning. This is an important seminar, especially as it is being held when we are dealing with the COVID-19 pandemic. I would therefore like to commend all the organizers for organizing this seminar, as it will help the insurance industry respond to customer needs that includes using the digital platforms from product development, distribution, and servicing the clients in general. Ladies and gentlemen, regardless of one's income level, no one is exempted from the risks and shocks that often come with huge losses and financial demands. Inclusive insurance products provide an opportunity for people in the low-income markets to have access to affordable and appropriate insurance products. It is for this reason that the Pensions and Insurance Authority has been highly committed to both market development and supervisory role for inclusive insurance, or microinsurance as it is called. Since 2009, the authority has collaborated with the Technical Advisory Group, now the TAG Association, on various initiatives aimed at improving access to insurance for the underserved or unsaved market segments. The dynamic distribution models, especially additional channels, are at the core of inclusive insurance business models. And technology has proven to be an enabler of access to insurance, and particularly in premium collection, in the claims administration and claims payouts. As a regulator, we are therefore highly committed to promoting the technology applications that make it easier for people to access insurance and also experience high standards of service delivery. In the last 10 years, the regulator has approved various digital inclusive insurance solutions that you will learn about in this conference. Some of these initiatives face challenges, and there are lessons learned which will be shared by both the local and the international practitioners. The lessons of regulations will be shared in the session on regulating the insurtechs tomorrow. I'm delighted to mention that we are at the tail end of the new insurance bill, which does not only enhance provisions for conventional insurance, but does recognize and paves way for specific regulations that will guide the development and growth of the inclusive insurance sector. The opening up the distribution space provides opportunities for insurtechs and mobile network operators to innovate and partner with insurance companies to improve accessibility of insurance services. Undoubtedly, the new insurance bill has a framework that will spur innovations aimed at digitization of insurance services. We have seen over the years, and we do commend the insurance companies that are making serious investments in digitization of client service functions within the insurance value chain. This conference is not only timely, but a valuable one, particularly as we have all witnessed the impact of COVID-19 on businesses that solely rely on physical interfaces. As a regulator, within our market development role for inclusive insurance, we will continue to contribute with the TAG and the other insurance stakeholders and development agencies to push the frontiers of digital inclusive insurance. We will inevitably see room for enhancing regulatory sandboxing and innovation labs and for InsurTech solutions. And finally, it is important that practitioners never forget that while it is important to innovate and come up with innovative digital solutions for inclusive insurance, products should still be designed by putting the targeted clients at the center. Regardless of how dynamic and innovative the distribution model is, the products must address the real risk management needs of the targeted clients. I'm sure the theme of the customer centricity will be discussed and shared in this seminar. We commend the TAG and FinProbity Solutions for hosting this important event, and also express our gratitude to the Microinsurance Network, Financial Sector Deepening Zambia, and Munich Re Foundation for supporting the event. Last but not the least, we thank all the practitioners who have joined this seminar as moderators or speakers to share the various experiences. We have no doubt that this event will contribute to the development of an inclusive insurance sector in Zambia. With these few remarks, I wish to thank you and wish you all the best and good luck. Thank you.
Highly grateful, Acting Registrar, for those kind remarks, and we are so grateful to also note the tail end of the new bill that will pave way for inclusive insurance. I'll now hand over to Katherine for her remarks.
Thank you, Lemmy, and thank you to my fellow panelists. Betty, I'm very, very glad to be on a panel with you. Tresford, I believe we've met sometime before when I was in Zambia in 2018. Shipango, great to see you. Rishi, Dirk, and Lucia, and Lemmy, a very warm thank you to you as well for organizing these 2 days. I'd like to take a little bit of a step back. So we were honored to be part of the Inclusive Insurance Conference in Zambia in 2018, which is co-organized by Munich Re Foundation, the Microinsurance Network, and of course in Zambia with the TAG. And it was really great at that conference to be able to present the results of the 2018 landscape study focusing on Zambia, where we saw really very high penetration levels with respect to inclusive insurance, higher than many countries that we see around the world. And the following year, the following iteration of that showed that that percentage had been consistent. And it really represents just over 1/3 of what I would characterize as the target population. So thinking about what that means, people who are very poor can't afford to buy insurance, we know that, but people who have emerged from poverty and are becoming part of an emerging middle class can, and it helps them to build resilience. Now, in Zambia, you're blessed with quite a strong emerging middle class, and that has been the case for a number of years. And I think it's a tribute to the successful development in your country, whilst acknowledging that development nowhere is perfect. And I think it's important, when I say to take a step back, to look at this historical view and acknowledge that this needs to be fostered. So reaching such a level of success where just over 1/3 of this target population has some kind of cover, perhaps not enough life cover, not enough pensions cover, and there's certainly room to grow because we know that nearly 2/3 don't have the adequate cover, pending the results of this year's survey, which is still underway. I think it's important to note that the last year has been a real scourge for many people around the world. And it's easy to forget that people who have recently emerged from poverty are still very vulnerable and can very easily fall back into that poverty. And indeed, we've had the Secretary General of UNDP and of the UN stating that something like 30 years of development have been wiped out with the pandemic, loss of access to income and jobs. And we know that this is still ongoing. So now more than ever, I think it's important to consolidate and for the financial support that is needed to consolidate the gains that have been made in countries like Zambia to continue. This is not a time to withdraw. This is a time to stay the course, to work together, to ensure that the hard-won gains that we've seen in places like Zambia, which has got such an impressive penetration with respect to inclusive insurance, don't get wiped away through some short-term trade-offs. So I think that would be my call, to applaud network members who are not just present on this panel, but also amongst the speakers and are very actively continuing to work in Zambia. And I think of organizations like the World Food Programme, like GIZ, the German Development Agency, and others that continue to stay the course to ensure that no one really is left behind in this battle against poverty. So I would also like to add, to reinforce what Tresford was just saying about digital inclusion. So this is an area that I've looked at for many years, way before I took on the role of running the Microinsurance network. And the digital divide can be very, very real. So, and it operates in two ways, which I'm sure that people more eminent than myself will go into in some technical detail. First of all, there is a cost barrier. So there has to be technological access and coverage, but access to data really has to be affordable. And I think the other aspect is making local content available, ensuring that messages and communications are available in languages and formats that people can really understand. And here, this is particularly important in the case of financial inclusion and specifically insurance, because digitalization is absolutely crucial for inclusive insurance to reach the scale that it badly needs. The margins are thin. That doesn't mean that they're not there, but this is a volume gain. And in order for it to work, enrollment processes have to be smooth. Administration has to be efficient and cost effective. And most importantly, client needs such as processing of claims and paying out of claims has to be transparent, efficient, and fast. I'd also like to reinforce what the previous speakers have said about the importance to put the customer at the center of everything. The end beneficiaries are the reason that we do what we do, and it's absolutely critical to keep them at the center of our thinking, work with them, and not try to design products and solutions from the boardroom. So I wish you a really successful and pleasant 2 days that I hope will be the beginning or the continuation indeed of much of the hard work that has been going on in Zambia over the course of several years. Thank you very much.
Thank you so much, Katherine, for those remarks. I think reoccurring the progress that Zambia has been making since the last 10 years now, and the TAG has been very instrumental in pushing the inclusive insurance frontier. I like your points, of course. I always like the points of customer centricity that you have highlighted. Sometimes we think digital is a way to go and it's a silver bullet. I think we've seen some very innovative products fail to meet the needs of the target market segments. So without wasting time again, I'll transition to Dirk for his remarks. Thanks.
Thank you, Lemmy. A very warm welcome also on behalf of the Munich Re Foundation. Dear panelists, all protocols observed. It is really a great pleasure for me to be here with you, although I would certainly have preferred to be with you in person in Lusaka And as we already have heard, we hosted the 14th International Microinsurance Conference, which is now called the International Conference on Inclusive Insurance in 2018, together with TAG, with the support of FSD Zambia, the Microinsurance Network, and many others. So even more, it is a great pleasure to see this event taking place in a digital version despite all the challenges related to COVID-19. And I'm keen to learn about the developments since the 2018 conference in this country. Therefore, a big thank you to our partners hosting the event, the TAG, FSD Zambia, the Microinsurance Network. And certainly a big thank you goes to the Pensions and Insurance Authority for being here today. And thank you to the mastermind behind this conference, Lemmy Manje from FinProbity Solutions. Now, as we heard, the pandemic represents an unprecedented challenge, but it also created an unprecedented opportunity, which is the need to speed up digitalization, which is the core of this event. I believe that the development of inclusive insurance in Zambia has been heavily influenced by digital solutions. When we attended the conference in 2018, we heard that starting with around 100,000 lives covered in 2009, the market grew to 3 million customers in 2014 due to strong mobile insurance-based funeral products, which is based on digital solutions. But then again, it had dropped back down again. Another good example of how a product supported with a good technological solution can reach out to a lot of people is the National Agricultural Insurance Scheme implemented in 2017, which I believe still has over 1 million customers. And that is, again, another product which is combined with digital components. So we see the potential for growth, but also the potential for losing customers if we don't get the digitalization right. Or as Lorenzo Chan, chair of the board of the Microinsurance Network, has put it in one of the past conferences, online solutions always need an offline backup. It is key to find the right level of digital solutions because the users still need to understand how to use them. And maybe even more important, we need to trust digital solutions. Trust in insurance remains a key challenge, and it takes a long time to create trust, but trust can be lost in seconds. And certainly, as we just heard, we need to be customer-centric. So everything has to be designed around customer needs. This reminds us that digitalization can only support market development and can only be a tool to overcome the many challenges of inclusive insurance. Understanding customers' needs to design suitable products, create an enabling and positive environment, and pursue public-private partnerships were key takeaways summarized by Shipango Muteto after the 2018 conference. And I think it's still true. And we need to understand what role digital solutions play in this respect and how an enabling environment for digital solutions may look like. Corporations and partnerships, as Shipango had said, is key. And this is why this conference brings together practitioners to share experience and to learn from each other. We need a long-term and customer-centric approach that involves all stakeholders. And Shipango just mentioned the stakeholders involved here with the TAG. We must keep in mind that climate change will have a huge impact on developing countries that highly depend on agricultural income, and that will increase the pressure to find appropriate risk management solutions to cope with the negative impact of changing weather patterns. And again, there, digitalization, getting data plays a key role. I firmly believe that insurance is an important component of sustainable economic development and that it can help to improve living conditions of billions of people globally and millions in Zambia and the region. But we need to speed up our efforts, and we need to understand how digital solutions can help us in order to do so. And this is what this event aims at, understanding the opportunities, but also barriers and how to overcome those. So thank you all for participating. Thank you so much for your attention. Thank you again to the organizing committee and all partners involved. And I wish all of us an interesting conference.
Thank you so much, Dirk, for those remarks. I think you closed by highlighting the importance of insurance for resilience and also its contribution to social and economic development. But more importantly, you highlighted the need that we need to accelerate the development of inclusive insurance sectors in most of the developing markets. So that's without wasting much time again. Now I have a pleasure to invite Betty to also provide her remarks.
Thank you very much, Lemmy. And all protocols observed. It's an honor and a privilege to be here today and to be speaking about a few of the issues associated with digital insurance issues. I'd like to also particularly acknowledge those of you who have been working so hard on the insurance bill, which the government invited large numbers of organizations to make comments, to discuss. I think that was a very wise idea. And we know that the bill is very close to moving forward as soon as the elections are completed in August. I'd like to speak a little bit about the environment for digital finance and digital insurance in particular, because we have the benefit of a very recently completed FinScope in Zambia. And there are particularly 3 sets of information that I'd like to share with you. The first is that we did look at the question of digital finance, and we actually have a specific report that will be coming out from FSD Zambia soon on this issue. But one of the important things to recognize about digital financial services is that there is a gap. So we have we've moved exceptionally well from use of digital financial services at 14% in 2015 to 58.5% in 2020. So you can see that digital finance has really caught on, people are expanding, etc. Then we ask the question, so, okay, for those of you who are not using it, why are you not using it? And the answer for the majority of those who were not using it was, we don't have a cell phone, we can't afford one. Now, this is particularly true of women, but it's also true of men. And so the environment for digital finance requires that you have 3 things. 1, you have to have towers and access to signal. And I want to acknowledge both GSMA and the government of Zambia for having pushed for this. And the government has expanded a large number of towers. So we're now at about 93, 94% physical coverage of all the population. So that's the first thing. You need a cell phone. The second thing about digital finance and insurance is that there have been significant movements forward, particularly in areas like the agricultural weather index insurance, which I'd like to acknowledge Lemmy because he drove it from the beginning. But the important thing about this was that the government is moving forward with digitization of services generally. And so then it connected farmers who were receiving, had the potential to receive the insurance under the Farmer Input Supply Program, which is over 1 million farmers, with the way that the payments for premiums were made. So the farmers would pay for their contribution to the FISP, and at the same time pay their contribution for their premium. And then when received, those are split and paid for directly by digital means to the companies concerned. So this is a big step. It took a while, but now it's making the process much, much easier. So that's the second thing. The third thing that I think is important to recognize is financial health of households has a lot of aspects to it. But one of the things that in Zambia has turned out to be quite important is risk. So when we did the survey and we said, okay, what about the status of your financial health? The average across the country was only 14% felt they were fully financially healthy. And the biggest risk, the biggest issue that the surveyed population gave us was, we have a problem with risk. We can't manage our risk. You know, we have all sorts of issues and unanticipated problems, and climate change has been an important aspect of that. So what we see is there's a significant demand for more insurance, very significant, all different kinds. And so the product development is going to be very important here. The product information will be even more important, because although we have 1/3 coverage of people in the country, only about 6 to 7% now understand that they have coverage. So the financial education aspect of insurance is going to be quite crucial. Now, one of the things that we did in looking at this question was we said, how are we going to get phones out there? Well, let's do a trial. So CETA and Comic Relief financed FSD Zambia to push phones out to poorer women and to vulnerable households, including those who are disabled but could use a phone. And we had a partnership, which was quite wonderful, with the regulators, with the 3 MNOs, with a number of different other types of organizations who could help us to look for who are these people who need a phone and have signal, and then how do they use them. And one of the things that was quite interesting for us was to see how many of those people had no idea how to even turn on a cell phone. So with the MNOs, we worked with each one of these households to help them understand, this is a phone, this is how you turn it on and off, this is how you answer a call, this is how you save a number and then get it back. And this was because we wanted to assist them with access to information on COVID-19, information on markets in the area, and financial education. And what we found was that already these people are using their phones very actively for all of these reasons. So if people have a cell phone and they understand how to use it, they access and engage in services. And this becomes very important, not only for Zambia, but also for other places. So this is what's happening. In the industry, I want to acknowledge the Zambian insurance industry. We have been deeply involved with them for some time. They are very serious about client centricity. They're spending a lot of money on developing these types of products and testing and learning. And the next step is going to be, like with AO, who you will hear from later and with whom we are involved. How can you make cell phone-based services work? How can you make digital services work? How can you make the fact that most phones in Zambia will end up being simple cell phones for a while? So how can you develop your products to reach those people in that way? So these are the kinds of things I think are quite important to be thinking about. Is the environment right? Is the understanding of the population right? I also want to acknowledge the insurance industry because they've been deeply involved in the development of a national financial education curriculum, which is now being rolled out for grades 8 to 12 and will come forward in grades 1 to 7 next year. And it will help children to learn about insurance, understand it, understand about digital, and then take it home to the family and explain to them too. So these are the environments in which, and the work that's going on in Zambia and in other countries to move these things forward. And I think that it will be great to, as the seminar and conference goes ahead, to talk about these things, to ask about, well, what are the barriers to people having insurance, microinsurance? What about their level of understanding? What about that products are being developed but may or may not be actually absorbed? For example, in the earlier days in Zambia, there was an insurance company that linked with a mobile network to push out insurance, but there wasn't clear enough understanding about who did what, who communicated what, who managed what. And as a result, that particular entry didn't work very well. Whereas we're seeing with AO that's actually expanding very, very quickly. It's a health insurance with consultation with doctors on the phone. People love it. So let me stop there. We have a very exciting agenda for the next few days, and I'm looking forward to hearing more from all of you. Thank you very much. And thank you for the sponsors as well.
Thank you so much, Betty, for those remarks and the emphasis that we should not forget the systemic barriers to accessing insurance. And FinScope studies have been very helpful and consistent to highlight some of these barriers over time, understanding of products, and of course, communicating products efficiently. It is, of course, unusual if you can insure someone and then the person doesn't really know, and then when they try to know, they don't know how to get to understand. So those are some of the issues that are going to be highlighted throughout these products, and also practitioners are going to highlight some of the innovations to address some of these barriers. I think the key messages from all the speakers who have opened this seminar has been don't forget the client, make sure that you use technology as an enabler, and just make sure that you do address the real risk that confront the low-income market segments. And of course, for Zambia, I think we've got a path where we've seen some of these challenges, and some of the players are navigating to address them. It is now my privilege to invite the keynote speakers to make their presentation. And we will have the first presentation from Lucia from Cenfri, providing some insight in terms of the landscape and also some of the issues around digitization and COVID as well. And then her presentation will be followed by Rishi from GSMA, providing also some insights into some of the global trends. Actually, Rishi is going to start and then Lucia will follow after. So Rishi is going to give us some of the global trends, and then we'll focus more on some of the trends within the region, Zambia, and also some highlights on COVID from Lucia. So may I hand over to Rishi now?
Great, thank you very much, Lemmy. I'm hoping you can see my screen.
Yes.
Great, thanks very much, and thank you for the very warm introduction. I am very grateful to you for the kind invitation to come and speak at this event. I've got fond memories actually of the 14th International Conference on Inclusive Insurance, which Dirk mentioned was a success, and Shipango alluded to as well, and I completely agree. It was a phenomenal success. Of course, it is a pity that we're not meeting in person, but hopefully that'll change in the next few months. But in any case, my name is Rishi Raithatha, and I'm a Senior Advocacy Manager for the GSMA's Mobile Money Program. And as Lemmy mentioned, I'm based out of London. So the GSMA represents the interests of mobile operators worldwide. It is the Mobile Industries Trade Association, and it unites more than 750 mobile network operators with almost 400 companies in the broader mobile ecosystem. The Mobile Money Program, which I work for, is set up to support mobile money providers and other industry stakeholders to increase the use and sustainability of mobile money services and increase financial inclusion. And part of our remit, of course, includes looking at mobile-enabled insurance services. I'd like to start off by drawing your attention to some of the key messages or key statistics that we published in the 2021 State of the Industry Report on Mobile Money, which was launched a couple of months ago. There are three main figures I want to draw your attention to. The first is that there are now 1.2 billion, I beg your pardon, registered mobile money accounts. And of these, 300 million are active on a monthly basis. And the final thing to try and highlight out of all the information you see on your screen is that the value transacted daily by the mobile money industry has passed the $2 billion mark. So that's $2 billion daily. Now, the State of the Industry Report not only looks at mobile money, but also provides a snapshot on adjacent services such as credit, savings, and insurance. To try and collect data, we send out a global adoption survey to mobile money providers as well as insurance providers. What we found from last year's survey was that there are at least 130 mobile-enabled insurance services operating worldwide. Now, these services are concentrated in 28 countries globally. And through these services, we know that around 43 million, or rather over 43 million policies have been issued. When we zone into sub-Saharan Africa, we found that at least 57 services were operational in 14 countries. So given the numbers you see on your screen, that's almost a 50% split for the number of services and the number of countries. And as you may have guessed, of the 43 million policies in force, almost 50% were issued in sub-Saharan Africa. In terms of how these policies actually broke down, we found through our survey that the vast majority of policies that were issued in 2020, almost 2/3 of these were purely life and health insurance policies. Given that a quarter of all policies are combination products, we can assume that most mobile-enabled insurance policies still tend to cover either life or health. But what we have seen is an increase in the number of agricultural or crop insurance policies. And part of the reason for that is just to see, on our part, a broader engagement with providers who offer such policies, as well as an increase in the number of providers who tend to offer such policies. What we also found through our analysis is that there has been a very interesting shift in the way premiums are collected. Now, 3 years ago, I attended the International Conference on Inclusive Insurance in Lusaka, and at the closing ceremony, I presented the statistics that you see on the left, the 2017 statistics, at which point in time, only 31% of policies used mobile money to collect premiums. I'm really delighted 3 years later to be in a similar forum and inform you that actually the numbers have flipped on their heads. And now we've got a scenario where almost 2/3 of policies use mobile money as a means to collect premiums. So there has been a change in terms of the dominant method for payment. And it pleases us that mobile money has grown in such stature to the point that we've seen a 33% percentage point increase between 2017 and 2020. So what we also looked at was the reasons as to why airtime deductions have decreased, and there are a number of reasons for this. Airtime deductions, as you all know, have been effective at establishing a user base and even scaling a product. But in the long run, collecting premiums through airtime deductions is simply not sustainable. Firstly, we found that central bank regulations where in microinsurance markets often do not accept airtime as a means of payment because it can be classified as an unregulated currency. So there is a regulatory issue where airtime is concerned for the long run. Secondly, we found that there has been a shift amongst mobile users to purchase data-only top-up packages or bundled packages of core services that include voice, data, or SMS. So that doesn't leave much actual spare airtime for any other purposes because you're buying a dedicated bundle. And that means that premiums cannot be deducted from these packages. So purchasing them diminishes the need for any additional airtime that you might need to make regular deductions for insurance services. Finally, we found that airtime and data top-up purchases are also subject to VAT, and in some markets, an insurance levy when being used to deduct premiums. So adding VAT lowers the actual premium an insurer would receive, while the issue of double taxation can actually impact the ability of a provider to keep prices low. And without naming any markets, we have seen this crop up as an issue in a couple of instances. So what we also have been looking at, in addition to our work that I've highlighted in the State of the Industry report, is that in the last 3 years, we've seen a couple of key trends emerge, key business trends emerge. There have been previous challenges, as Betty alluded to, for mobile network operators or mobile money providers to launch insurance services in partnership with technical service providers or with insurers, I beg your pardon. But despite these challenges, a number of mobile network operators have been trying to co-launch insurance services. And that includes the likes of Airtel Tigo, of MTN, and that does not include IO actually, but MTN itself and Orange. Of course, EcoSure, as you all know, in Zimbabwe has been around the block for a while. And we also saw recently that Vodacom in Tanzania had launched a product together with Britam Insurance, specifically not on health or life insurance, but actually to provide third-party motor cover to car owners. And this is a unique product because it is paid for from the onset. It's not a freemium product, and it requires an upfront payment for the whole year via mobile money. So what we found is that while we've seen an increase in the number of mobile network operator-led services, there's been an interesting shift between, or rather an interesting split between business to business and business to consumer as a distribution channel. For both types of channels, we see a range of examples. So as you can already see on your screen, I've listed IO, Digifarm, and Vodacom, which recently launched, as well as MTN and Orange, and these are primarily business to consumer products. EcoSure, which offers funeral cover, hospital cover, and cover for personal accidents. These are all sold directly to consumers, but at the same time, Econet's agri-arm, Ecopharma, offers index insurance products as well as a combination product that are sold either directly to users or via aggregators such as the Zimbabwe Farmers Union. Looking at the services that are led by technical service providers or insurers, you'll have the usual companies that we all know fairly well in this bracket. So BMI and Inclusivity Solutions are well-known business to consumer service providers. And MLife in Zambia, I remember going on a field trip with them 3 years ago, and it was interesting to understand their way of selling insurance, which was network agnostic at the time, or mobile money provider agnostic at the time. And they targeted both direct consumers as well as unions. So for example, taxi or bus drivers union as a way of trying to sell to both consumers and to aggregators. We also found that at the very other end of the spectrum, you'll have the likes of Pula and the products offered by the Microinsurance company, which are primarily business to business, ultimately to consumer. And so there is a really healthy range of different approaches taken by insurers or insurance products that are led by technical service providers and by insurers themselves. And with that, despite the fact that Lemmy had given me 20 minutes, I'm pleased to bring my short presentation to an end. If you'd like to learn more about our work, I've enclosed a couple of links that will take you to the State of the Industry report. And if there's any time, Lemmy, I'm very happy to answer any questions, of course.
Thank you so much, Rishi. And I've noticed we haven't yet had some questions coming in the Q&A. Just wanted to remind the participants that please feel free to send your questions on the Q&A, and we'll definitely have the Q&A at the very end. It's very interesting to actually, I think one of the slides that you put up, we kind of have almost like, I would say maybe 70 or 60% of the logos that you put up there are featuring in this conference, so which is great. BMI is there, Inclusivity Solution, MLife, Digifarm. So yeah, so it's very exciting that we're going to learn more insights from the practitioners that you've been working with as well. So we'll transition now to the next keynote speech. And once again, just to remind all the participants that feel free to post your questions in the Q&A function. And should you have any technical issues, you can also use the chat function. Lucia.
Great, thank you, Lemmy. Yeah, so good morning, everyone, and thank you all for joining the session today. It's a great privilege to be here and to be able to share some of the insights from our research. So as Lemmy mentioned, I'm going to be speaking about the state of digital financial services, as focusing on insurance, both in Zambia and across sub-Saharan Africa. And then I'll move on to present some of the research we conducted during COVID-19 on the digitalization of insurance. So looking at financial inclusion in Zambia, it has historically been quite low. However, with the expansion of digital financial services, inclusion has grown and will continue to grow. And before we go on, I'd just like to clarify what we mean when we speak about digital financial services. So this is just essentially a broad range of financial products, so payments, savings, credit, remittances, and insurance that are accessed and delivered through digital channels, including ATMs, mobile phones, as we've mentioned, or just through the internet. And this is typically done by both financial and non-financial providers, so banks, microfinance institutions, as well as mobile network operators, fintech companies, cooperatives, and more. So in Zambia, financial inclusion and the uptake of digital financial services is predominantly driven by the rise in the usage of mobile phones. As we see from the top graph, the uptake of mobile money has more than quadrupled over the last 5 years, so from 2015 to 2020. In addition, the rise in the number of individuals with an active digital financial services account has grown significantly. It was 24% in 2017, and it is now 69%. And this growth is attributable to mobile network operators, who comprise 80% of all accounts, followed by banks. And if we look at the bottom, there's also been significant growth in the number of merchants in the active agent network, transaction volumes, and a rise in the number of digital financial service providers from 18 in 2017 to 21 in 2019. Now moving on, I'd like to highlight some examples of how we've seen, when we mention digital insurance, people tend to associate it with mobile-enabled solutions, because this channel has seen significant growth across Africa, as Rishi just mentioned. So, for example, Hollard partnered with MTN a few years ago and their technology partner, the Blue Group, to provide MTN EduSure, which is a value-added insurance solution that allowed users in Zambia to subscribe to education insurance through their mobile phone, with premiums being deducted from their mobile money account. And this essentially entitled the customers to a lump sum payment made in the event of their death to cover future education costs for their children. However, it's important to highlight that there are several digital channels or partnerships that can be used to distribute insurance. So the second example, which has gained popularity in recent years, is digital platforms. So these digital platforms provide innovative ways for insurers to reach customers. For example, Cenfri, which is an insurtech in South Africa, partnered with SweepSouth, which is an on-demand home services app also in South Africa, to provide accidental death and disability cover to all SweepSouth's domestic cleaners. And platforms are a really good aggregation point for insurers, allowing them to access many customers through one channel. So SweepSouth, for example, has over 7,000 Sweep Stars workers on their platform. Another way through which insurers can distribute insurance is through remittance providers. So AXA, for example, partnered with Western Union, which is a cross-border, cross-currency payments provider, to provide affordable life and disability insurance cover to Western Union customers who send money from France to 10 African countries, and they can easily sign up for this insurance when they send the money. So again, these remittance providers are great aggregators. Western Union specifically has about 150 million customers who use their platform. So this is a really great way for insurers to reach scale. And the last example, which I would like to touch on, is through value chains. So the example that I'd like to highlight here is Parcel, which is an insurance technology company that delivers data-driven cargo insurance solutions for essential supply chains. So they recognize the challenges faced with transporting vaccines to developing countries with the recent COVID pandemic. And to address this, they developed sensors that are placed inside the fridges that carry vaccines from the manufacturer to various health facilities in developing countries. So what these sensors do is that they track and provide data about the environmental conditions experienced during shipment and while in storage, from the first mile to the last mile. And then these This data is used to inform and encourage supply chain best practices. So the sensors are also used to develop parametric insurance solutions. For example, if there's a drop in the temperature, Parasol is notified, and then this will trigger the claims process. And these sensors really allow them to offer tailored and accurate triggers and payout levels based on what the business and their clients need. So now, looking at some of the barriers to digitalization that we've come across, just like to mention in Zambia, when we look at the growth in the types of digital financial services, we've seen significant growth in first generation digital services. So this includes peer-to-peer transfers, airtime purchases, utility payments, and cash in and cash out transactions, which accounted for over 80% of the total volume and value of digital financial services transacted. Second generation services, which include more advanced digital financial services, such as microcredit and microinsurance products, as well as loan repayments, merchant payments, and transfers, on the other hand, experienced a lot less growth and essentially contributed less than 15% of the total share of transaction volume and value in 2019. And among these, we've seen insurance contribute, or the insurance contributions quite low. So this comprised less than 0.3% of volume and 1% of value in 2019. And there's been some common challenges that we've seen from our research across Africa when it comes to developing digital insurance solutions. The first common challenge are the distribution channels. So a major source of inefficiency in sub-Saharan African insurance markets is the lack of digitalization across the value chain. A lot of insurers use legacy systems, which lead to high costs of doing business, and many insurers across the region also still rely on traditional business models and also rely heavily on brokers and agents for distribution, and thus limiting the amount of customers that they can reach. The second barrier that we've seen is poor infrastructure. Despite significant technological developments that have occurred across the continent, there are still infrastructure constraints which many countries face, which prevents digitalization. In Zambia, for example, internet penetration was just under 30% in 2021, while only about 40% of the population had access to electricity in 2018. The third challenge that we've come across has been a lack of digital skills and literacy. And this is a problem that is faced across many African countries, which makes it particularly challenging to switch to digital ways of doing things, as many customers still struggle to interact. So in Zambia, on average, there's about one computer for every 119 children in the school system. And in addition, only 10% of the population between the ages of 25 and 54 had some form of tertiary qualification in 2017. And linked to this is also the fact that insurance is sold and not bought. So it's difficult to convince people to take out insurance, hence the need for more active forms of selling, using brokers and agents, for example, versus digital channels, which are more passive and might not be able to convince customers in the same way. And the last point is just the regulatory restrictions, which are present in many sub-Saharan African countries, which often prohibits e-signatures and electronic contracting. Sometimes regulators require KYC documents to be physical. In other cases, we found that many insurers are also uncertain about what the regulation permits them to do. So these are just some of the barriers which would need to be addressed if we are to see significant growth in digital insurance. I'm now going to move on to discuss some of our findings. So just to tell you a bit more about the research that we conducted during COVID-19. So we rolled out a survey in June to explore the immediate impacts that the insurance sector was facing in Eastern and Southern Africa. We received responses from 68 insurance sector stakeholders, so including insurers, microinsurers, reinsurers, insurtechs, and associations across 19 markets in sub-Saharan Africa. And what we found is that the COVID-19 pandemic really exacerbated a number of existing challenges in the sub-Saharan African insurance industry and placed further pressure on the need to address these challenges. One that I'd specifically like to highlight in this regard is the lack of digitization across the continent, which was strongly emphasized over the last year. And COVID-19 resulted in many insurers' operations being heavily constrained and limiting new sales and product development. However, it's also meant that COVID-19 has acted as a powerful trigger for insurers in seeing the value and need to digitize their own internal processes, and in many instances, fast-tracked existing plans or forced insurers to adopt new plans to digitize their operations. So if we look at the graph, so from our research, we found that many insurers had to switch to digital means of operating internally, for example, switching to remote work. A lot of them had to buy laptops for their staff or set up internet connections, etc. And if you look at the left-hand side of the graph, so we found that about 30% of insurance sector stakeholders had digitized their operations prior to COVID-19, but that on the right-hand side, around 66% of respondents digitalized or were in the process of digitalizing their operations as a result of COVID-19 across sub-Saharan Africa. So we really have seen that COVID-19 accelerated insurers' prioritization of conducting various operations digitally. So looking at the extent to which insurers digitalize their sales. So here you can see the extent to which the stakeholders were using e-signatures or remote onboarding to sell insurance digitally. So if you look at the two graphs, you can see that insurtechs and microinsurers were more digitalized in this regard, while a larger share of insurers, about half, were not making use of remote methods to sell. And the main reasons for insurers not being able to sell digitally include that they didn't have the internal systems in place, that they were often uncertain regarding whether the regulation allowed them to do so, or that there were no appropriate databases for them to utilize to identify customers through digital means. And we've seen a shift in international financial service standards and practices, moving away from the traditional requirements for face-to-face client onboarding. And these physical onboarding processes are often inefficient and costly for insurers. Digital alternatives offer a lot more security and ease of onboarding. And moving to a system where identities are proved digitally and documents are collected and validated remotely can really reduce costs for insurers and also decrease customer drop-off. Now I'd just like to touch on some of the great examples that emerged during COVID-19 of how insurers had digitalized various functions across the value chain. So starting with product development, on the left-hand side, we see that during COVID-19, as I've mentioned, the internal operating constraints faced by insurers led to a halt in new product development. In addition, we saw that many regulators were facing similar constraints and as a result, were not able to approve new products. However, we did see several insurers developing add-on benefits to existing products for consumers to respond to COVID-19 related risks. So for example, the insurance brokerage firm Munich and Britam in Kenya partnered with Sasa Doctor Virtual Medical Clinic to launch a telemedicine solution, which is aimed at providing online live video medical consultation services for patients, which enables them to access care despite the restrictions on movement. If we move on to sales and renewals, so we saw that the pandemic resulted in reduced sales and renewals across Africa because many insurers were still relying on face-to-face sales methods, as I mentioned. In addition, various distribution partners also struggled to work remotely or lack the digital systems to be able to operate remotely. And COVID-19 really forced many insurers to explore digital sales options, for example, targeting their clients via social media, WhatsApp, emails, or phone calls. Other insurers have also been capacitating their agents and brokers to sell digitally by developing mobile apps, upskilling them, or teaching them to sell over phone. And the example that I'd like to highlight with this is Cenfri, which is a digital life insurer in South Africa. They experienced a 30% increase in their sales from March to June last year, particularly via their digital broker channel. Another insurtech that operates in Ghana switched to digital lead generation using call lists and digital campaigns via Facebook, and they managed to sell over 50,000 policies in the course of 6 weeks by using these digital channels. Now, if we look at premium collection, so we saw again that many insurers were quick to switch to digital channels. And I think Rishi mentioned this example, but AO developed mobile hospital and life cover. Users can simply register on their mobile phone for this cover and then get a minimum of 30 days every time they load airtime. Other examples include an insurer in Zimbabwe who started allowing clients to use mobile banking or EFTs to pay their premiums. Next, if we look at customer servicing, we see that insurers again were quickly migrating to engaging digitally with their customers, again using email, phone, or WhatsApp to contact their clients. And many also developed web portals or self-servicing portals for clients. For example, Budget Insurance allowed their customers to log onto the company portal for their policy documents and to check up on their policy. And yeah, from COVID-19, we also saw that customers were more willing to engage digitally than ever before. And we also found that technical service providers who typically assist insurers with making their internal processes digital also saw a significant rise in inquiries from insurers who then wanted to digitize to improve their engagement with clients. And lastly, if we look at claims processing, so we saw during COVID that many insurers were facing challenges in assessing, validating, and paying claims remotely. In many cases, physical engagement was still required, and regulatory requirements around hard copy documents were a significant barrier. But again, we saw a switch to digitized claims processing, which ranged from end-to-end digital claims processes for more straightforward claims to other insurers who were accepting images of documents and damages that their customers had experienced. And then they were just able to send those documents to the insurer over email or phone. And yeah, microinsurance is also a great example of this. So they provide health and funeral insurance to farmers in Kenya in partnership with One Acre Fund. And they changed the way in which they process claims due to COVID-19. So initially, their agents and loan officers would have to go to the villages and assist farmers with completing claims forms, which they would then take to the local office to validate and scan. However, after COVID-19 hit, to ensure that claims could still be processed and paid, Microinsurance allowed farmers to complete the forms and take pictures themselves, which they then sent directly to the offices. In addition, they also set up a claims settlement fund to allow fast claim payouts. And with this approach, they improved their claims turnaround time to about 4 to 5 days. So yeah, despite the challenges that COVID-19 has brought on the insurance sector in sub-Saharan Africa, it has forced many stakeholders to digitize their value chains. And while this digitalization has initially resulted in an increased expense for many insurers, it will, in the long run, reduce insurers' costs and then improve their efficiency, which can lead to enhanced insurance market development in the medium to long term in sub-Saharan Africa. Thank you. I'd like to see if there are any questions. I haven't been able to keep track of the Q&A.
Thank you so much, Lucia. I've been keeping track of the Q&A, so I haven't seen much activity there. So I thought maybe I could kickstart with some questions, and maybe we could have some questions from the participants as well. Let me start with Rishi, and then I'll have some questions for Lucia as well. So Rishi, can you share a bit more on the issue of client education? So I think it came out from the opening remarks that despite going digital, I think client education is one of the key issues that people need to understand products. People need to know what they are being signed up to. And of course, they need to know the process as well. And I think Dirk did highlight one of the examples of ensuring that they are always offline solution. And then my second question was, does any of your partners deal with some of the sectors like agriculture, providing digital solutions for smallholder farmers when it comes to inclusive insurance?
Yeah, thanks very much, Lemmy. Great questions. I mean, I'm going to try and answer both from an agricultural point of view because of some pre-existing research that we did last year. So the client education issue is unfortunately quite a big sticking point, and there really isn't an easy sort of way around it. I think there are some really interesting lessons to be drawn from all different types of insurance providers, but I think where I've seen a lot of effort being made is with agricultural customers. Of course, you can appreciate that with smallholder farmers, the levels of literacy for both digital and financial services can sometimes be quite low. So there's a lot of handholding that goes in there. If you look at EcoSure or EcoFarmer in this particular case, their agricultural branch, they have a partnership with the Zimbabwe Farmers Union, whose agents are able to serve as educators by helping people sign up and explaining how the product works as well. I think what we've also seen is, in a number of instances, the ability to try and align with pre-existing, let's say, methods of risk management. So where you've got some sort of collective savings group that already might exist in, let's say, a setting with smallholder farmers, demonstrating how insurance is similar but potentially better because of its ability to provide wider coverage is one sort of method that we've seen being applied. But I mean, that's not all. And I think, you know, the reliance on agents can only go so far as well. We've seen Acre Africa, for example, and OCO in Mali use, they call them robocalls, IVR, I guess is what we would call them, as a way of trying to engage with their customers and ensure that they're aware of what they've signed up for, how it works, to answer any questions that they might have as well. So I think that sort of balance between having the agents on the ground, the boots on the ground, and then supplementing it with additional effort on the part of the insurer are some of the things that we're seeing. Of course, there are varying degrees of success. There's an interesting anecdote that I have. I was in Western Kenya in February last year, and I went to try and interview a number of farmers, and I speak Swahili. But for the first time in my life, I met somebody in Kenya who didn't speak Swahili at all. And so then I thought, well, okay, if you've got an agent or who is trying to, comes from the city and tries to come to educate you or to sign you up, what do you do there? And what do you do in a scenario where, let's say, the organization who's providing the insurance is trying to call you to try and explain that this is how it works, or you might have a claim to make or so. But then what we found is that you often have friends and family you sort of rope in to try and provide some guidance there. So I hope I've tried to answer your question from both of your questions with one answer there. There's a lot of initiatives being taken on the part of agricultural providers simply because of the levels of understanding that they have to deal with as a baseline. Okay, all right. Thanks. And Lucia, there's a question for you. So could you advise what is a simple, more effective solution to deliver microinsurance, a funeral benefit, taking into consideration the challenges she mentioned regarding the scenario where there is low understanding of both inclusive and also digital payments?
Yeah, so one solution that I can think of is, as I mentioned, the use of kind of established partnerships, so digital platforms or the remittance providers. So often in those cases, the users are already familiar with the payment channels on either the app or through the provider. So that's kind of that established trust is a great way for insurers to leverage to sell insurance to those customers. And we've done some great work with digital platforms in the past where we've partnered with them. We've conducted research on the users of those platforms, but then provided recommendations to insurers who want to reach out to those customers. But then, as I said, these customers are already familiar with the processes on the app. So it's not like we have to, or the insurers have to teach them anything from scratch necessarily. However, then using the platform, insurers also often will have educational campaigns or marketing campaigns which provide education to the customers either on the financial product or how they can easily use the financial product through the app or through the payments channel.
Okay. And maybe just a follow-up question from me. You talked about e-signatures from a regulatory perspective. How is that from a client perspective? Because I know in one market, I think they had struggled with farmers just to have a digital kind of a policy. So you receive an SMS on your phone which says this is your policy and you're insured. So they ended up introducing a printout device to the farmers. So each farmer who bought insurance ended up with a printout. The farmers were more comfortable as opposed to a digital, an SMS which goes to the farm. So have you done any research with regard to acceptability from a client perspective of digital kind of solutions when it comes to affirmation of policies?
Yeah, I haven't been directly involved in that research. However, I can say that it is very important to obviously take the client's preferences into account. So, I also have heard of insurers who will then use agents to go around to people who often will have a biometrics device to register customers. But yeah, it really does boil down to whether customers are able to and willing to engage digitally. And this is something that we did see among our COVID-19 research, where the customers were a lot more willing to engage digitally because of the restrictions on their movements. And yeah, so there are a lot of innovative ways for insurers to make sure that their customers feel comfortable signing policy documents digitally. But yeah, it is definitely a consideration that needs to be taken into account.
Okay, thanks. And then you highlighted poor infrastructure. I was hoping maybe Betty could come in for Zambia, because I know FSD Z has been doing some work on trying to push the digital solutions, but from a policy and also infrastructure perspective. So Betty, maybe you could highlight maybe if there are any developments that we may need to be aware of on the infrastructure side.
So thanks, Lemmy, and Lucia, this has really been a good presentation, and also Rishi, I'm very interested in what you have to say. With regard to the circumstances of this infrastructure, we had a problem with a lot of legislation that hadn't been done. So e-signature, e-commerce, this kind of thing. So there's a bundle of sort of last minute scramble to put some of this in place. And some of it had political backgrounds, which was a little uncomfortable. But much of the legislation was passed in this last session of the parliament before they rose for the elections. So I think that there's been progress on the legislation. There's also been progress on putting up the towers. It's a little worrying because the towers they tend to be 2G and then 3G, whereas we're going to probably need 4G to move a lot of this stuff across. And the biggest problem is power, because when we did the distribution of this 44,000 cell phones, people said, but how are we going to make sure that we can charge them? We have no power anywhere nearby. So we actually distributed solar chargers with a lot of these cell phones, just so that people can have enough power. So power is a problem. So understanding how to use a cell phone is a problem. So historically also, people do rely much more on paper, and they also have problems about where to keep it. So these are all challenges. And people, you know, I mean, Zambians are slow adapters because they've had bad experiences with trust. And this is not only Zambia, it's a number of countries. So where you don't know if you can trust what's coming at you. And of course, now we've got problems with cybercrime. And so people get messages and say, send money to me, and they don't know better, so they do it. So this kind of thing is a real challenge for end clients. And so the way to handle this is to get people involved in early stage activities. So for example, savings groups, as Rishi mentioned, savings groups are great because they're an early stage insurance experience. And so then they understand, okay, if you put money into something and then someone in the group has something bad happen that we've agreed, like for example, your spouse dies, then there's a payout and it's agreed on it. So then people understand how this works, and then they can say, okay, well, a company wants to offer me this. Let me understand how it works. And so I think in Zambia, the circumstances are changing. The challenge with most of sub-Saharan Africa is you may have a policy, but the implementation of the policy and the implementation of the practice is harder. And it's harder in a place like Zambia, where we have people who are very, you know, they're very, very isolated. The village is here, and then there's, you know, 100 miles before you get to the next village. So population density is a challenge, and then power, and then signal. So once you have those things, then it's easier. Thanks.
Okay, thanks, Betty. And then one question. Okay, so we have one for Rishi, and says in the data that you show, the trend suggests what concerns to inclusive insurance, which product and digital channel seems to be more effective?
It's too soon to say, because we've seen a bit of an evolution. I think, you know, very early on, there was a discussion about how mobile operators had tried to launch services, and the fact, I think Betty mentioned this, in fact, that they tried to launch services, failed, and then you're seeing the advent of IO in this particular case, who maybe have learned some of the lessons that they would have had first time around. I mean, one of the most important things I hear when I talk to operators to try and understand what went wrong is the fact that they were trying to design an analog product and put it onto a digital platform, and that simply didn't work. Of course, there's more to it than that. You know, you've got to try and understand some of the barriers to improve insurance uptake. So I think it's a bit too soon to tell which is the most effective, because you're seeing different providers trying different approaches. You know, I'm quite keen to try and see how some of the mobile operators do, because I feel like it's a bit of a second wave. Sorry, no pun intended, of course, but it's a bit of a second wave of their involvement in this space. But at the same time, you're seeing businesses that are led by technical service providers. So if you look at it from an agricultural point of view, you're seeing the likes of Oko and Pula, and they've raised Series A funding or so. So they're clearly doing something quite well without actually having you know, a deep partnership with a mobile network operator. But I would say that these are the two approaches that seem to be the ones that that are being opted for, that are being chosen for various reasons, and it'd be worth keeping an eye on them.
Okay, and Lucia perhaps could answer Rahab's question on whether there are any trends in dealing with the issue of acceptability, and also high client touch as well, whether there are any companies who are focusing on digitizing agent networks.
Sure. Yeah, so I mean, we haven't seen any companies that are focusing on digitizing agent networks specifically. However, when we did our research of how insurers were managing the impacts of COVID-19, we did come across various examples where the insurers were trying to upskill their agents to continue operating digitally. So, you know, teaching them how to sell via WhatsApp or via calls, as well as selling over social media, or upskilling them digitally in general as well.
Okay. Rishi, any examples from your end?
I'm struggling to think of that. Sorry.
Okay. All right. Shipango, any comments there?
No, in fact, just maybe a question, something to learn from Rishi.
Okay.
One of your slides, you did indicate that the majority of, I think what you've seen among the solutions that are there, and also in the inclusive insurance, is around life, health, and those products. The experience we have in Zambia looks to be similar, where we see the life companies, those that are providing health insurance, getting into the inclusive insurance space. On the general side, we seem to, I think we've done a lot of preaching, but we seem not to get a number of people converted, if I would use that term. What is your experience elsewhere? What is the problem? Maybe just for us to learn from what is happening elsewhere. Why is it that maybe the general insurance providers are not seeing, for lack of a better term, the need or value or whatever to provide some interventions in inclusive insurance?
Yeah, that's a really interesting question, Shipango, and thank you for that. I think what we have seen is that when you look at the way mobile is used, it's typically used for products which have a low price, really, and you can have other kinds of insurance products. So, for example, motor insurance, that's not going to be particularly cheap, especially if you're providing comprehensive cover. How do you do that through mobile? You're targeting a completely different market. So you're not targeting those who are, let's say, on low incomes for such products like that. And I think that's probably been one of the main issues. But I mean, when I was in Zambia 3 years ago, and I was with MLife, who took us on a tour of Lusaka to speak to some of their clientele, they had. Obviously, they were providing life and health cover for all these individuals that we met, so the teachers' unions and the taxi drivers and bus drivers' unions. But they were talking about providing travel insurance as well, due to the high fatality rate, the unfortunate high fatality rate on Zambian roads. So I think there was a bit of confidence on their part that they could try and digitize this product. Because as I said, it's typically something that you would buy from a broker or from an agent or directly from an insurer, but how do you do it on your mobile? And how do you get people to understand that you can buy it on your mobile? So I think there is that there's that gap there in terms of understanding how it works as well, but also maybe in terms of whether you actually are able to target the right market. I'm not sure that these are the only lessons. I think there's a lot more to it than that. But I do believe that there have been a lot of attempts. So MLife is one example. There's DTAC in Thailand, who launched a travel insurance product years ago. I'm not even sure if it's still around. And then you've obviously got Voda and Britam. And I think that's one to keep an eye out on, because Britam have been around the block before. They launched Linda Jamii with Safaricom. They're currently underwriting an inclusivity solutions product in Kenya. So at the end of the day, I think certainly that's a product to keep your eye on, because it's quite unique, and it's going to try and look at how you can digitize the kind of insurance service that hasn't been done before.
Okay. Betty?
Hi, I just wanted to add to what Rishi was mentioning. The Transport Association of Zambia approached us and said, we have this problem. This problem is that we need insurance to license vehicles. And what happens is people buy a month of insurance, they license, and then they ignore the rest of the year unless they're caught. So RATSA approached us and said, can we work with the insurance industry to digitize the insurance process? and make sure that we have information on digitization, then we can issue an annual license, and we know if they haven't paid the rest, and then we just stop the license and they get in trouble on the road. And we're helping them do this. It's not that expensive, and it turns out to be a really great way to handle the insurance mismatch and gaps. And so this is digitizing, and you see it very often in Zambia, as Lemmy will remind us that with the public-private partnership between the Ministry of Agriculture and insurers on the weather index insurance, very often these are situations where a very large number of people have the problem. And the solution is very often a public-private partnership of some kind. So I think that may be helpful to consider in these processes. Thank you.
Okay, thanks, Betty. And probably the last question in our last 3 minutes, it's on exclusivity of agreements. Very tricky questions. So Lucia and Rishi, have you come across this? So the question is, I think we've seen a push for insurers and MNOs to have exclusivity agreements. And normally what happens is an insurtech or insurer will have to just work with one MNO and so on. So the question is, does this defeat the purpose of actually taking advantage of the blue ocean? Okay, who wants to go first?
Lucia, happy for you to go first.
I'm actually going to hand this over to you, Rishi. We haven't done that research on mobile network operators.
Okay, thank you for that. So I don't think it defeats the purpose at all, because insurance is something that is not well understood, and as we've discussed in this forum here, requires a high degree of trust. Now, people trust mobile network operators because if you buy a scratch card or if you top up, you'll see the money arrive on your phone instantly or instantaneously. So if you partner with one mobile network operator, it doesn't mean you're necessarily limiting yourself from other customers out there. It does mean that you are potentially looking at a smaller pool to start off with, but that's not a bad thing, because you have to try and build trust, then you build scale. And then once you build scale, you then have an interesting problem on your hands. And I think, we're talking about a problem that unfortunately not too many insurance services have actually managed to face, because along the way, there are a number of speed bumps that have to be overcome. And in the past, those speed bumps have led to services, unfortunately, withering away. So I'm not entirely convinced that you're limiting yourself from the off. I think that if you suddenly do scale very quickly, then maybe you have a problem, but this is not something that has been openly encountered before. And there was another question on white labeling as well that I saw in the Q&A. So that's an interesting phenomenon that we see happening for certain types of products, particularly in the agricultural space. And I think that there is a possibility of seeing more and more of that, because you have specialized companies that have data on index insurance or indices, for example, and that can monitor triggers and so on. So I think that white labeling is potentially an easy way for a mobile operator to get involved in the insurance space, but by no means is going to guarantee you success, because you still need to have a proper insurance value chain in place.
Okay, thanks so much. And we are right on time at the end of our opening session. I'm so grateful to Lucia, Rishi, Shipango, Tresford, Katherine, Dirk, and Betty for setting the scene. And I look forward to the rest of the conference. The next session will be starting in 15 minutes, so you can have your virtual coffee. Thank you, everyone, and thanks to the speakers, and thank you so much for participants for joining as well. If we have any questions unanswered, and I'm sure we will definitely take on some of these questions to the rest of the sessions as well. Thanks.
Thanks, great to see you all.
Thank you.
Thank you very much. Bye-bye.
Thank you very much. Bye.
Bye-bye.
Thank you, Lemmy, and everybody else.
Thank you.